Let us try and understand about double entry system of accounting. Now, before we get into the technical terms of this, let us see one or two simple transactions. Okay, whenever you go to a market, okay, let's say you make some purchases, right? So let's say you bought out a tablet. Okay, so you go to the computer dealer, okay, and you ask him what are the tablets available in the market. I'm not talking about the medicine tablets, I'm talking about the computer tablet. Okay, so he tells you, look, there is A, B, C and other brands which are available. You say, okay, within my budget, this brand B is something that I can purchase. So you ask the seller to give this brand B tablet to you. So the seller gives the tablet to you, okay, this is you, and you pay him cash, right? Now, from your perspective, there are two parts to this transaction. One is you are getting a tablet, and second, you are making cash payment, right? Let us take another example. You go to a movie hall, okay, and you purchase some tickets, right? You get the tickets and again you pay cash. So there are two aspects. One, you are getting the tickets, and second, you are making the payment in cash. Now, double entry system of accounting is basically a system which recognizes both these aspects in accounting terms, right? Now, in double entry system of accounting, there are always debits and credits. Now, you know the rules for debit and credit, right? If you're not, then maybe you can go through our other videos to understand the rules of debit and credit. What the double accounting entry system says is that in any transaction, the debits and credits are equal. Okay, so when you get a tablet, let's say you get a tablet for 9800. So what happens is you get a tablet which is an asset, a valuable asset for 9800. And the rule of accountings will tell you that an asset, when it comes in, has to be debited. So you will debit the asset by 9800. At the same time, when you make a payment in cash, the amount of cash which was available with you will go down. So there's a reduction in the value of asset. And the accounting rule will again tell you that reduction in the value of asset has to be credited. And again, the amount will be the same. Right? So in a double entry accounting system, the debits are always equal to the credit. A double accounting entry system recognizes that every transaction has two aspects, one debit, one credit. Right? Similarly, for the purchase of this ticket, when you purchase a ticket, you get a ticket in your hand. At the same time, you have to pay cash out of your hand, cash or credit card, whichever it might be. Okay? Right? But again, there are two aspects to the transaction, and the debits are always equal to credits. If in a situation there are more than two accounts, let's say for example, this tablet was priced at rupees 10,000. Okay? And you get a discount of 200. Right? And you pay cash rupees 9,800. Now in this case, basically instead of two, there are three accounts which are involved. One is the asset involved, second is the discount that you get, and third is the cash. Now there are two ways to account for this. You can either say, okay, the tablet costed MRP was 10,000, but I got it for 10,000 minus 2,000 or 9,800. So I will debit it by this number only, which is nothing but this entry. Or you can say, I got this special discount, my asset is worth rupees 10,000 only. So you will debit the tablet by 10,000, okay, while you will credit how much? Cash for 9,800, because that is what you have paid. But I told you the debits are always equal to credit. Here what is happening is that the debit is more than the credit by 200. So you will credit discount account over here for 200. Now please note, in subsequent chapters you might come across situation where this credit may not be there necessarily. Okay, the rules are different for asset credit and all those things. This was just meant to give you an example that there might be more than two accounts, but the total of the debits has to be always equal to the total of credits, right? How you will treat this credit, where it will go in the balance sheet, ledger and all that we are going to understand subsequently. But your takeaway from this particular video is that a double entry system of accounting recognizes that there are two aspects to these transactions, one debit, one credit. The total of debits is always equal to the total of credits. Normally there should be two accounts, but if there are more than two accounts also, the total of debit of all these accounts taken together will be equal to the total of credits of all these accounts taken together. Right?